charts. Yeah, watching the flow, candles rise up, then they drop down low. Pips in his pocket, he's stacking it tall. Market structure trader, he's got it all. Open and range, it's the key to the game. Breakout moves, profits calling his name. Market structure leads the king. Trading waves, let the profits sing. Mean reversion, he's locked and loaded. Like the banks, his strategy's coded. Just don't lie, he reads every line. Forex indexes, he's making it shine. Positions held with precision and grace. He's in control, it's his trading space. Open and range, it's the start of the show. He's a pro, yeah, he's running the flow. Market structure leads the king. Trading waves, let the profits sing. Mean reversion, he's locked and loaded. Like the banks, his strategy's coded. He walks the charts like a shadow king. Candlesticks dance where the prophets sing. Pivots and breakouts, his gospel's clear. Mean reversion whispers what no one hears. Open in range, he strikes the key position right where the games will be. Market wizardry, every tech bend says decree. Forex waves obey the sea. Bow down to the market structure trader. Indices tremble when his cursor flies. Fibonacci lines cut through the lies. Algorithms falter at his stare. While rookies gamble, he's prepared. Risk is locked and the stops are tight. His strategy hunts through the dead of night. Market wizardry, every trade a prophecy. Stacks his wins for all to see. The throne belongs to the market structure trader.
Morning all. I can't believe you don't like my music. What's wrong with my music? AI is brilliant. Oh, that's really bright. Don't need that on. How are we doing? Happy Friday. Right, let's have a quick look at the news to start off with. Morning Baggy, morning Chris, morning Everybody's got silly names now. Friday. CAD unemployment this afternoon. We're not getting the US rate, unfortunately. So we had the non-farm unemployment change, but we're not getting non-farm payroll. So all we've got today is the CAD unemployment at 130. We've got inflation expectations, which doesn't really tend to do a massive amount. It's classed as high impact, but it doesn't really have an awful lot of impact a lot of the time. Sometimes it does, but it's just we kind of know what inflation forecasts are. So it doesn't, as you can see, it doesn't really tend to kick off or do anything. So we can kind of ignore that one this afternoon. That's coming out at 3 o'clock, half an hour after market open. But we have got PCE. So there could be some decent movement off of PCE, and we've got Michigan. So there's 3 high impact news events landing half an hour after market open this afternoon. So it could sort of kick the indices into a sideways movement before, where's my pen gone? Before the news event happens. So obviously when we open up, the market may well just sit around sideways for a little bit, waiting for 3 o'clock, and that's when it might kick off today. So we'll see what happens. DAX this morning has broken to the upside. Not really. I was having a quick go at a short there, but it didn't work out. Down to the gap fill, just seeing if they would quickly do the gap fill, but they haven't. So 5-minute opening range is in. 404 is minimum, so we should get a trade off of 432. So we will get a trade off of the 5-minute range today. We'll see where that one goes. DAX at the moment, we are a little bit more bullish this week. So we have obviously done the gap fill on Wednesday. And we are out into new highs now. That's why I was kind of thinking they might do that gap fill, but they haven't. But we are obviously potentially rallying up to test those highs. But as you can see with the DAX, we are totally sideways, and we have been sideways since Trump got in, basically. So this is since May. Just not going anywhere. These indices at the moment are really struggling. So DAX today, upside. Obviously, there's tons of upside potential today. You've got this nice A-shaped recovery move over 3 days, which was a break of that previous level there, which we came back and retested and then dropped from. So this is really your upside target, I think, today, which is the bottom of that propulsion gap, which is about 70% of ADR. So there's loads of upside. Downside would be the gap fill. So we'll see where we go. Did that trigger? So yeah, we'll see where we go today. That's just about 15% of ADR there. Kind of fancy a short, to be honest. Just to get the yesterday's close done. We'll see where it goes. And there's not a lot of room actually on that one. It's only going to be sort of a 1R to the downside. There we go, triggered long. So we'll see where we go. DAX has been pretty terrible over the last few days. I'm just going to trigger a quick buy on that low. So DAX has been a bit crap this week. All the indices have been crap this week. It's been a crap couple of weeks actually, about 10% down over 2 weeks on ORB. It's just not moving. Nothing is moving properly at the minute. Everything is very choppy, as you can see, and it's just causing stop outs. So whenever you're in ranges, the best thing to do is sell the high and buy the low. Obviously, you don't know if you're going to be in a range until you're in a range. So there's not a lot you can do to filter these out. People are constantly contacting me saying, have you thought about doing this? Have you thought about doing that? I've tested this with tens of thousands, probably hundreds of thousands of variations and filters. There is no way to filter the future unless you have a time machine. So there's no way to filter out ranges. You can't tell you're in a range until the range is there. You can't use ATR. You can't use volatility. You can't use anything. You just accept the losses and you take the massive wins when the market takes off. That's all you can do. So you just have to sit through these, unfortunately. It is coming, we're obviously in December now, 5th of December. So it's coming into that point where we've got the market starting to think about slowing down. So typically I tend to take 2 weeks off before Christmas. Markets tend to get a bit flat. But equally, I've seen up until a few days before Christmas, the market's been incredibly active. So there's no real way to gauge what will happen and when it will sort of die down. But this is typical Christmas trading type of price action. So the ORB over December period, over the Christmas period, doesn't tend to be great. We're only at the 5th of December and we've had a week of not great. So, a month before Christmas isn't normal. So it may be that we actually kick off and get some volatility coming through at the Christmas period. But I don't know, it's just odd at the minute. Breaking down at the moment. So we'll see where we go. But yeah, looking like it's going to short down into the gap fill. So I don't think that was a good trade to take. I've got this new, I've been working on some new indicators, basically. Somebody's asked me to work on an indicator. And I've built this little EA basically just to take trades. It's just like the trading view risk reward calculator basically. So all you do is you say, I want to go sell, paints in a sell, it gives you all the information about how much you're going to make, how many pips, what your risk is going to be. You can adjust the risk and muck about with it basically. So I just built this over the last couple of days just as a quick sort of thing. You can do market orders as well. So you can place pending orders, or you can do market order and it will just track price. But I've just built this for scalping. The price action toolkit is great. I've been using that for scalping, but price action toolkit is a lot of buttons. It's a lot more complicated. And I just wanted something I can just say, just get in with $150 risk and bang, take trades. So that's what I'm using. But yeah, I've been building this indicator for someone who trades Al Brooks's stuff, which is just price action basically. So this indicator draws in previous highs, previous lows from sessions. So it uses session data rather than daily data. Also does previous days, previous weeks, highs and lows. It will draw in the candle numbers because they Al Brooks's stuff uses candle numbering and things. So it's basically that indicator, but you can turn everything on and off. So you can just turn stuff off and back on depending on what you want to use. And you can turn on and off the numbering. It's got a session moving average you can turn on and off stuff. And it gives you all the data as well. This is quite interesting, all the data about where we are with everything. So how many, this is the interesting part, how many inside and outside days we get. So whenever you're trading, obviously, and you're looking at the previous highs and lows of the previous day, if you open up inside the previous day, there's a very small chance, as you can see there, 14% chance that you're going to get an inside bar, which means that one of those two extremes is going to go. So, and this is obviously where we make money with the opening range breakout. If you're opening up inside the range, there is a 85% probability of you actually getting one of those targets. So if that doesn't work out, you take that one because one of those is going to go because it's very rare to get an inside bar. So it's interesting seeing all this data plotted because you wanted all this data plotted for the last 100 days and also bull streaks and bear streaks to plan for pullbacks and that sort of stuff. So it's interesting stuff. But yeah, anyway. On a fun tangent. So ADRs today. There's no ADRs so far today. There's been no real news, particularly overnight. So there's nothing. There's been no Asian news forecast overnight, and we've had nothing released overnight. So there's no ADRs today. As you can see, this has been a really flat week. We've got 4 weekly ranges hit. And they've only just really hit those weekly ranges as well. Nothing's really exceeded anything this week. It's just been one of those weeks where we've just really done nothing. So we've had a bit of movement, but not enough to go to any extremes. So it's all a bit flat at the minute. These, like euro pound, you are still down at that kind of weekly range low. So there is a chance we might start a pullback this week on that. And you've got a few other weekly extensions as well. Pound CAD, that one, you got the reversal alert on the hourly yesterday, and it's retesting right now. So there's your potential M pattern back down into the last week's high, this propulsion here. You've got the pound Swiss also extended to the upside, and that is still going. So, that one's primed, ready for a drop. You can see we've had an RSI extension really for sort of a day and a half on that now, and it's not stopping. So there's a really nice target here for a downside today. So you could watch this on low time frame today and wait for those reversal alerts to come in. 15.5, I haven't got any data. This is a different account I've loaded up, so I've not got any data in it. That's really annoying. But yeah, wait for the reversal alert on that to trigger today. That's a good looking short potentially. And pound US dollar, that's just had the reversal as well, and we're in the retest on this. So this is potentially forming a head and shoulders. That is the aggressive short entry. Obviously that would be your conservative short entry under the neckline. But these fail kind of 80% of the time. So be aware. But anyway, when they do work, it's because they're extended usually. And you've got a lovely target in the middle there to head for. Aussie dollar CAD weekly range is just extended as well. So we got a bit of movement coming in on Friday, which is unusual. So that's still running. Looks like Canadian dollar's dropping on the forecast of the news. So obviously we got the unemployment rate forecast to go up today, which is going to be negative Canadian dollar. So they're selling the Canadian dollar ahead of the news at the moment. So although Euro CAD is coming down, and so's pound CAD. So not necessarily that. That's probably Australian dollar strength. Yeah, it's Aussie dollar strength coming through. Look, they're buying the Aussie. So those are your weeklies. RSI extensions, the hourlies, we've only got one, which is the Swiss yen, and that's still extended. So there again, there's a nice pullback opportunity. You've just had a reversal alert on the 15-minute on that. Which is, I know you haven't actually, it's just about to go in now. So the reversal alert is literally going to trigger in 25 seconds. So that's your first reversal alert, potentially long 15-minute time frame, looking for a push up into here. 4 hours, Aussie US, nicely extended to the upside. So that one on the 4 hour. Nicely extended and embedded. We were above the 85 level there. We got to 87. As you can see, we're still pushing up, and RSI is coming down. So you've got bearish divergence. Parabolic move now, second week up, Aussie US. So this is your second week of movement on this one. So really nice looking opportunity for shorts on that. You may, depending on what you're using, if you're using 4 hour charts, you may already be in that. I think I am short on that one already. No, I'm not. Too much correlation on for me on that. But yeah, so that's nicely extended to the upside. That's your biggest extension. You've got two other Aussie extensions as well, Aussie CAD and Aussie Swiss, both up there. So any of these Australians basically could mean reversion opportunities today. Let's see what the DAX is up to. So long break is holding, but not breaking. It's interesting doing this indicator for this guy. It says up here potential range. So I haven't studied Al Brooks's stuff in any massive detail. I've read his books, but not really studied it in a lot of detail. But one of the things they use to determine whether we are in a range day or a trend day is 3 bars in the same direction closing on their highs or closing within a percentage of their highs. Yeah. So again, that's something that you I've built into the indicator for him, which is what's it called? What do they call it? Always in detection. That's what it's called. If the candle closes within 30% of its high, 3 candles in a row closing within, well, and you can obviously adjust this to what you want it to be, but that is classed as a potential trend day. So what you're basically doing is, with this sort of strategy, if you like, or system, is you are looking to literally to sell the highs and buy the lows all the time, unless you get 3 candles in a row, basically, which is telling you that we are potentially going into a trend. And then you just wait for the pullbacks in the trend and you just keep buying the trend. So it's pretty cool in the fact that it just says, right, until we get some movement, assume that we're not going to move, which is right. And usually that is the first sort of hour you're kind of chopping around. But 20% of the time, we break out at the open and we continue to go that way. So 80% of the time you're going to do this at the open before you make a decision. 20% of the time you go parabolic at the open. Obviously the 20% of the parabolics we make money on, and the ones that go like that at the open we also make money on as ORB. So this is kind of a more we wait around type strategy. But yeah, it's interesting relearning all this stuff, because I learned all Al Brooks' stuff years ago. And I read his books years and years ago, and I haven't really revisited it. It's just price action, reading price action. Lots of ways to read price action, but it's interesting recapping it. Anyway, Swiss yen, nicely extended on the 4 as well. You're about to get an extension below 20 on that if this candle holds to the downside. So again, potential pushback up into here. What else we got? Euro odd is extended as well to the downside. That's still coming down against the Australian dollar, obviously. So you're probably going to get another extension on that one. Euro Swiss extended to the upside, not as big, and same with the pound Swiss, both the same thing. So the pound Swiss is the better of those two. Also extended and embedded on the hourly. So lots of opportunities for RSI. We'll go through this in the members stream this afternoon, what I'm in basically. But we'll go through that this afternoon in the member stream at 2 o'clock. Right, let's see how we're getting on DAX wise. I'll catch up on the chat. Morning, elevated. No, it's absolutely horrible. Sorry you don't like my music. I love it. It's only because it's about me. Morning, Marco. That Ronan guy on Discord is hilarious. Ronan? Oh, Roman. Yes. Sometimes I think his messages are AI generated. I know. I've tried to. He DMs me as well. Might even be in here. If you're in here, say hi, Roman. But yeah, he DMs me as well. His results, and I'm like, I don't know how many times I've told you that the strategy is going to fail. It's going to have weeks where it doesn't make money, because there isn't a strategy on the planet that doesn't. You've been hunting for the Holy Grail for 20 years. You haven't found it. Maybe it's time to give up and just conform to logic and maths, because that's how it works. But it won't listen. So, won't listen, can't help. Was this some kind of new EA? Yes, they crap. Was this some kind of new EA? I don't know what you were talking about then, what I was talking about. Do you mean this? This is an indicator. There's 2 things on here. There's an indicator, yeah, and the indicator basically draws in the open, candle numbering, previous highs, lows, session highs, lows. You can adjust the sessions, all that sort of stuff. So you've got weekly low, weekly high. Today's high and low, but today's high and low won't get drawn in until we get to candle 18, because candle 18 has an 80% probability of putting the high or the low of the day in. So we only want to know the high and the low of the day when we get to candle 18, which is 1.5 hours into the session. This is all Al Brooks' methodology. So yeah, this is an indicator that basically just draws all this stuff in. So if I whiz over to something like the S&P 500, which is obviously in the Globex session. I just need to load up the right set file for the US. So this is the US set file. And the US set file uses Globex. So this is now plotting the Globex high and low, and the Globex high and low is basically the pre-market, obviously. So obviously we open at 230 UK. So we need to know what the Globex high and the Globex low is. So that is different data that we use in the US. And obviously you can turn that on and off. So if you trade in European markets, you don't need Globex because there isn't a Globex. But yeah, basically that's kind of what it does. And this is my little EA I've built. So all this does is basically do the risk reward calculations for you. Just a quick trade tool, basically. Anyway. Okay, so DAX is broken along. Lot of rejection at the moment up at the highs. Got 2 minutes left on this candle, so we'll see where we go. But there is no upside target really today. As I said, sort of 70%-ish of ADR. You've got potential resistance, but there's not masses today on the DAX. It's this area here basically is what you're looking at on the DAX today as potential upside. So it's this high, which is there, clearer on the hourly. So it's here basically. So you've got this massive move to the upside. So we're either going to sort of hit, we've got this accumulation here and here. Yeah, so either this propulsion gap that we're in right now, which is about to close, is going to be sellers. Yeah, but we only came and tested this yesterday and we got held there, but we've broken up. So it would make sense to me to, this is not going to hold and we're going to move into these two accumulations here. If those break, you've got nothing. Literally nothing much there. There's a little bit of an accumulation there, which is about 125 ADR, but there's loads of room. But as you can see, the DAX is just not able to go anywhere at the moment. Even, you know, a normal day on the DAX at the moment is just nothing. You get the odd move, yeah, but we are just so sideways at the minute. It's absolutely dire. But you've got to sit through these things. We're off today anyway, so. So I don't know if there's any Al Brooksy people in here, but this obviously now you've got 3 pushes potentially underway, but this one's not very convincing at all. So if this does go with another bull candle, it's not a confirmed bull move because, you know, it's not strong. It's kind of wicky, yeah, which isn't massively strong for the bulls. But if this does break up like that, then what you're looking for is basically pullback and enter, and a lot of fib stuff, you know, 50% retracements and pulling back into previous candle highs, that sort of thing. So it's all just reading price action at the end of the day. Inside bar setups, all that sort of stuff. Morning, Michael. DAX is off, thank God. I like the indicator. When will it be available? An MT4? I don't know. I'd have to ask if he's. If I don't know. It's not really something that was going to be commercial because it's not. It's for someone else, and it's also Al Brooks's stuff. So I don't know copyright wise whether. I mean, at the end of the day, all this is doing is plotting previous session lows and highs, last week's highs and lows, previous close and today's open. Yeah, you can't actually see that, but last week's high, if I remove last week's high. when it ticks. There we go. So there's the previous close. And it draws in the previous close at the actual market close time. So all of this data here that I've got on my chart, this is not real. And this is not real, obviously. So the market opens at 8 a.m. and it closes at 4:30. Yeah. So that is the actual session, futures session on the DAX. This is just crap. This is CFD. So that's the actual market close. So if we're going to go down, and it just so happens today, which is a fluke, that the market shut on my CFD broker yesterday at the same price as it actually closed. That's not normally what happens. If you look at that close there, the actual close of the market was somewhere around here. Yeah. So this plots the actual market close, which is what we will likely come and test. But yeah, I mean, it's not really doing anything but drawing lines, is it? It puts numbers underneath candlesticks. So I guess I could release it as a product, but it is only MT4 at the moment, because that's what he wants, because he uses MT4. But I wouldn't be able to use Al Brooks's name in it, though, I would imagine, because it's, mind you, everybody. Yeah, I don't know. I haven't thought about it. Is your entry time frame M15 on the POS? M5. So I use H1M5 mean reversion. So this is trading H1 RSI extensions. Yeah, so there's first entry, H1. I use 75 and 25 as my condition, and then 5-minute entries. If you're using H4, M15 is a better time frame. But or M5, doesn't matter. At the end of the day, with position trading, what you're doing is you're trading the hourly charts. Yeah. So what we're doing is we're trading the hourly RSI extension. And what we're saying is, don't get me in on the hourly, because by the time we get a signal on the hourly, we will have missed a load of the bear move. So all we're doing is we're dropping down a time frame in position trading, using multi-time frame analysis to say, right, I want to trade an hourly RSI mean reversion, but get me in on the 5-minute as soon as we see some bears. In this case, that might be completely wrong signal. We don't know. If we knew that, we wouldn't take it, obviously. But so yeah, it's just H1M5. They just go together nicely. The trouble with using H1M15 is you've only got 4 candles in an hourly chart. So you've got 12 candles in an hourly chart on the 5-minute time frame. So you get more chance to see developed price action. Yeah, we're taking M pattern reversals with a reversal alert indicator, or we're taking moving average crosses as entry signals. So you need basically, you can see here, this is an hourly time frame, but that there basically is your reversal alert, and your moving average cross on the 9 was there. So there's not a lot in it, but on the 5-minute chart yesterday, when you drop down to the 5-minute, your moving average cross, I mean, it would have been extended somewhere around here, but your reversal alert is probably there, if not there. Your moving average cross was pretty much the same candle in that case. But your reversal alert here, for example, would have been here. Your moving average cross would have been here. Yeah. But look at where we're getting in. We're getting in right up at the high here, rather than on the hourly time frame. We're getting in much lower down. So you're getting in up here on a low time frame. So as soon as you see the bears coming in, we want to be on board, because this might be the point. But it might not be the point. So there's no right or wrong. I've tested everything. I've tested position trading to death over decades. And there is nothing that works consistently better than anything else. Sometimes you're better off getting on the 5-minute. Sometimes the 5-minute signal's wrong and you'd be better off getting in on the 15-minute. Sometimes the 15 minutes wrong and you'd be better off getting in on the hourly. Which of those is the one to use is dependent on each individual trade. So pick one and go with it, because one of them is going to work. and you don't know which. So there's no point in trying to over-analyze and over-optimize anything in trading because it's all random. Every price action candlestick you see has never, ever been generated before on that hour, on that day, on that symbol. So there's nothing that is ever going to repeat itself to any accuracy level that is going to make you better or worse at an entry. This is why trading is so frustrating. Everyone goes, 80% of the time it does that, but 20% of the time it doesn't. And everyone's pursuing the 20%. Go with the 80. Yeah, perfection. You can't have perfection in trading. Pick a time frame. And every time you take a trade, you will go, if only I'd have got in on the, or if only I'd have, if only. There is no if only. The market goes up, market goes down. If you want to go down at some point, but don't worry about when you go down, just go down. This is what position trading is all about, why it's called position trading. We're taking a position short. I'm expecting the market to come down because it's gone up. That's all we're saying. Timing it is irrelevant. You can't time the market because the market is untimable. Every time there's a bear candle, the opposite candle that invalidates your trade has a 50% probability of happening. You've got a 50-50 shot on every single candle. So just take one. Just don't use risk that's going to blow your account every 5 minutes, which is what everybody does wrong. They get in with way too much size and it all goes Pete Tong. Sorry, if you're not in the UK, you don't know who Pete Tong is. And in fact, if you're of any generation different to mine, you probably don't know who Pete Tong is. It's rhyming slang for wrong. The DJ. There you go. I got told off about that the other day. It's something I've used a lot, Pete Tong. Anyway. It's the EA, not the indicator. Oh, quick, the EA. Yeah, I can release the EA. That's fine. Yeah, that I can release. This thing. I'm still just finishing it off, basically, but you can. It's really simple, basically. All it does, you can use percentage risk, or money, yeah, and you can set a risk step. So I've got my money set to 5. So when I click these buttons, it goes up and down in 5. And I've got risk percentage set to 0.1. So if I now change that to percent, it goes up in 0.1 increments, but I can also just go 2.5. Yeah, which I won't do. Way too high. Yeah. So you can do that with it. The standard, when you press the buy or the sell button, you've got an ATR multiple. So if you go 1 ATR, for example, with a 3 risk reward. Yeah, when I press the buy button, basically it puts your stop loss automatically at an ADR percentage of the time frame you're looking at. So that is currently 1 ATR. And then it just puts your risk in automatically at 3. Market order, as you can see, the blue line, which is your entry, will track price. So your risk reward will change and your lot size will change, depending on how the market's changing, because these two lines don't. If you get rid of that, it will stop tracking price, and then you can place a pending order, either a buy stop or buy limit. And if you want to go sell, obviously, it does that. But and that's pretty much all it does. You can have labels at the center instead of the left, depending on how big your chart is. So it'll put these in the middle rather than on the left-hand side. Because if you've got a big chart, you probably want them in the middle. If you've got a small chart like this, you probably want them on the left. And also it does pop-up alerts. So when you press the button and actually execute a trade, it will then pop up and say it's executed a trade, which I'd put in, but I didn't really, there's no point. And you can change the color. That's it. That's literally what it does. I might make it do more. It's one of those things that the thing is with this, you could add a million things to it, couldn't you? You could add a break-even button, you could add a trailing stop button, you could add a take 50% button. I mean, I've got dashboards that do this. I've got all sorts of other stuff. So, you know, you can do all sorts of things with it, but you know, where do you draw the line? You just hide him away when you don't want him. You can't hide him in the corner because obviously it needs to be that. But so, I mean, hide it up there when you don't want it. Just go, oh, I need to take a trade. Good, isn't it? I've had far too much time on my hands this week. I found EU, GJ, AF, NC, EC, AN, and GF are great uncorrelated pairs to trade your system with no more than 2 currency exposure. Do you think lowering the risk to 0.5 one can survive a prop account? You can. I've passed a prop account with position trading, but 0.5 risk is far too high. You say lower the risk to 0.5%. That's double the risk I recommend, treble the risk I recommend. Position trading, 0.5% risk is a lot. So if you look at the you look at my results here, yeah, I've done this. This is the sort of account that I'm using in the members streams. Or it will be. This is just the normal position trading account, basically. But this is running H1M5. It's done 13% using 0.25% risk per trade. Yeah. My drawdown, I'd have to have a look, but I don't know. Yes, that's not right. So that maximum drawdown is this, which isn't right because that, as an average, wouldn't have been that much. But it's whether or not you go over 5%. That's the question, because it's the intraday drawdown that kills you. But try it. The thing you've got to have with any prop account, yeah, you've got to have the market conditions right. It doesn't matter what the strategy is. On prop, this is the bit that people don't get about prop. You can't pass a strategy in prop by you can't pass a prop evaluation by finding the right strategy. Yeah, because there isn't a right strategy. No strategy has a consistent strike rate without drawdown all the time. So what happens with prop trading is, regardless of what your strategy does, if your strategy generates 200% return a year, yeah, at some point, there will be a point where it will draw down by more than 5%. Yeah, there's nothing that can generate that without drawing down by that as a minimum. More likely 30%, 20%, that's normal. Yeah, absolutely normal. I don't think I've ever had a year where I haven't drawn down by 20%, 30%. I don't think anybody in trading has ever had a year where they don't do this. This is the norm. Yeah, drawing down by 20 to 30% is absolutely required to generate profit, because if you haven't got this on, you can't make that. Yeah, because there's nothing that has a consistent strike rate. So if you're going to position trade, your risk needs to allow for either a drawdown event, which you survive, and that will take a long time, or you need to do high risk, like 0.5% initial entry, which is high risk, and you need the market conditions to be right. So what you need is market conditions to do this. And if the market does that on all the symbols you trade, you will pass your evaluation. If one of the symbols you trade does this, you will fail the evaluation, because that parabolic move at 0.5% risk will take you over 5% drawdown on that symbol. Doesn't matter how much money you're making on this lot, this one will blow the account. So it can be done, but you've got to have the right timing for the strategy. Yeah. And unfortunately, you can't time the future. So you have to just take the evaluation. In the academy, we cover in the prop trading to get paid, we cover this, which is the multi-account approach, which is how I do prop and how I pass prop and how I get paid on prop. But this has nothing to do with strategy. This is a strategy for trading prop, but it's not a trading strategy. Yeah. So it's a way to run prop accounts to make sure that you can get passes and payments. It's not a strategy that you trade on prop. These are strategies that we trade on prop. Yeah. So yeah, you could use, I don't cover position trading in here. But yeah, I mean, you can certainly position trade on prop, but you've got to get the right market, and you don't know what the right market is. You know, like some people are in Australian pairs at the moment. Not on that one. What was it someone was talking about? Someone was in something. What were they in? Aussie US they're in. So they're extended. Okay, yeah. So someone got in on Aussie US here, right? And it's been going up for 1, 2, 3, 4, 5 days now, and we're on day 6. So we got 6 bull days, yeah? Now, if you took your evaluation, if you started your evaluation on that day, this is probably blowing your evaluation, right? If you start your evaluation today, this will probably pass your evaluation for you, yeah? So the strategy of H1M5 mean reversion has nothing to do with passing an evaluation. It's the timing of when you start the evaluation that makes you pass the evaluation. Yeah. So you start it here, you fail. You start it here, you pass. Yeah. Same strategy, but timing is different. So yeah, you know, if the market, if you trade 6 instruments or 8 instruments or 10 instruments, and all 10 of those instruments basically do this. So they go up to RSI extension, down to RSI extension, up to RSI extension, down to RSI extension. You will pass that without even taking 2% of drawdown. If one of them does this, you'll fail. Yeah, but this is why we trade 0.25%. If you get in with 0.25% here, this thing has moved roughly 1, 2 ADR. Yeah, so this first movement here has caused you 0.25%, 0.5% drawdown. So you're in 0.5% drawdown here. Yeah. The second trade you took is in 0.25% drawdown. So that movement there is 0.75% drawdown with 2 trades on. You're about to take your third, and then it will pop down. And again, we cover all this in the position trading bootcamp in the academy. Yeah. The average trade is 3 to 4 trades within a position. So as long as you can survive 4 trades, which is the average, you'll pass prop. But you can't do it. If you use 0.5% here to get in, yeah, by the time you get there, this trade is in 0.5%, 1%. This trade is in 1.5%. Yeah, so you're in 1.5% drawdown on one symbol with 2 trades on. If 2 of your symbols you're trading do the same thing, you've got 3% drawdown. If the others are only in a little bit of drawdown, 0.25% to 0.5% at a time, that will take you over that 5% and you'll blow the account. You've got to go small. But equally, going with 1%, right, and trade 3 instruments, and if all of those just get 1 in, 1 outs, you'll pass. Tricky prop. I'm long Euro odd with 2 positions at the moment. Do you think this area where we are, Euro odd? Let's have a look. Yep, lovely support. So do you think this area at the moment is good for aggressive drawdown control? Yeah. But why would you do aggressive drawdown control with 2 positions? That's normal. Yeah, so you got in here, maybe. You got two positions on? Why would you do aggressive drawdown control on two positions? The average trade is 4. This is just a trade. So take a normal trade. You don't do aggressive drawdown control unless you are in trouble. Yeah, if your P&L is screaming red, which there's nothing highlighted here. Yeah, there's nothing in drawdown. There's absolutely no reason to do drawdown control for me right now. I've got 2 positions on this, 2 positions on this, 2 positions on this. That's totally normal. Yeah, I'm absolutely expecting to get into 3 to 4 trades to get out with profit. Yeah, if you've got 2 trades on and you're doing aggressive drawdown control, what you're doing is basically saying, I'm just going to take a normal stop loss position here with the probability of stopping out. Why would you do that? If you're in from here, 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 and here, and you're telling me that you're in 3.5 to 4% drawdown, yeah, take an aggressive drawdown control position. Highly probable it's going to bounce from here. And you would get out there with your profit. But you're not. You're in 2 trades. Don't do aggressive drawdown control on 2 trades. You can if you want, but all you're doing is you're risking a loss, aren't you? So, no point. I really like the EA. I would prefer MT4, but we'll have to go MT5 if you insist. This is MT4. What are you talking about? This is MT4. This isn't MT5. This is for MT4. I trade on MT4. I also trade on MT5, but 90% of my stuff is still, I'm going back to MT4. I can't bear MT5. I just can't bear it. I tried really hard, but it is total shit, and it's been total shit for 20 years, and it's still total shit. And until they fix it, I'm not going to trade the total shit. I'm going to trade the stuff that works. MT4. But saying that, this is MT5, and this is MT5. But I don't do any analysis. So EAs on MT5, not a problem. Indicators that I'm going to use to manually trade, MT4. I do all my analysis on MT4, right? On my VPS at the moment, I've got 4 accounts running, 2 accounts running, 1 POS, 1 copy trade POS, 1 normal account POS, 1 ORB, 1 copy trade ORB. I've got a demo account running on another strategy that is in development or forward testing at the moment. And I run my EAs on MT5, but I will never do analysis on MT5 because I want to be able to do this and this and this and this. Yeah, I don't want to do this. I'm just changing charts. It takes 3 times longer to do analysis on MT5 than it does on MT4. Why would you use this? For trading, it's great. For back testing, not a problem. But analysis, if I want to change charts, whoops. Whoa, hang on, I've broken it all. I want to change charts. Yeah, I want to do that. And all indicators load instantly. Everything loads instantly. MT5, it goes, hang on a minute, let me crank up the graphics card. There we go, there's your chart. Rubbish. Anyway, where's the DAX gone? So there's your first pullback on the DAX. So it's an outside bar, indecision. So if we now get an inside bar, that is basically potentially forming our first contraction. But we'll see what happens here. Partial close would be nice. So what I do, partial close, yeah, I use the trade portfolio dashboard. So I take trades here. Yeah, and what I do is I have the trade portfolio dashboard open and I just use partial closes here. But I could put partial close in here. But like I said, when do you draw the line? Yeah, and this is where I go wrong with my EAs. I build an EA, I launch it, and then someone says, can you put this in it? And I put that in. can you put this in it? 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 Can you put this? And then all of a sudden it's got 5,000 things. I just want to buy and sell stuff. If I want a partial close, I've got a dashboard that does that. And do you know what? I can also set it to close trades automatically for me as well. It could put trailing stop. I could do trailing stops. I can put buttons in there to say trail, partial close, all that sort of stuff. But then, you know, I could do. I don't know. I just built this for myself. I didn't build it with any view for selling it. Could do. Make a bit of side money. Pardon me, I'm into quarter. All right, yeah. So if you're getting in with a 0.25%, that's fine for position trading on prop. I mean, this is the thing. If you're going to position trade on prop, 0.5% will work. 0.25% will work, but they will both only work when the market conditions are right. So it's a difficult one. With prop, what I would say, if you're going to trade prop, I would make sure that you go with the A++++ setups. Yeah. So this is trading 75-25 extensions. Yeah. If you took 70-30 extensions, you'd probably be in more drawdown. Yeah. But equally, you might be in more profit if the market's going sideways. If you just wait for the A++ setups, yeah, the 80-20s, get in with 0.5% or, 0.5% risk, but only take 80-20s. You'll find that those 80-20s won't get into more than 2 trades usually within a position. So you got 3 on that one there, for example. If you took an 80-20, so like there's a great example, look. That entry there is 70. Yeah, that one is 75. So if you'd have got in on the 70 extension, which this one did, you took 3 trades. If you got in with the 75 extension, you only took 2. So you took that heat off. The profit obviously is slightly less because you wouldn't have got the profit on that either, but you'll take less heat. So 80-20 RSI extensions are probably, I just can't do it on MT5. I'm going to do it on MT4 because I want to be able to switch charts quickly. Yeah, so, you know, taking this trade here, bang, straight in, straight out. Taking this trade here, straight in, straight out. Yeah, you're not going to get many of them, but when you get them, they're going to work. So you can put a lot more risk on them. But you are reliant on the market delivering you some setups, which, God, I've really got no data on this, have I? Yeah, so 1, 2, out. Now that one would have been probably 3 out. Second time round, 1 out. That one there, 1 in, 1 out. Didn't quite get the extension there, but yeah. So you're going to get better opportunities if you have higher RSI extensions. The more the market is stretched, the faster it's going to snap. There's an entry there, look. There's not quite one there. Debatable. Yeah, but you know, it's 100% strike rate with 80-20 RSI, isn't it? You just got to be really super patient. Right, so there's a pullback. So if we get a bull candle here, this is what they call an, for the Al Brooks people, this is what you would call an H1, if there is a pullback. Obviously, if this candle turns green, this would be classed as an H1 candle, which is your first high for the bulls. So we're not in a bull trend because we've not had 3 candles close on the high. If this had closed here, what it would have done is drawn 3 arrows under here, and that would have changed to bull bias. Yeah, it would have said now we're bull bias. So what you're doing is you're looking for long onlys today because the bulls are fully in control. They are still in control, but not quite as strong here. We had a bit of a fight, didn't we? But so that if this turns green, this candle, if it closes green in 3 minutes, this basically becomes an H1. And that is a potential setup on a break of that high for leg 2. So there's leg 1, pullback, leg 2. But the better setup is you get an H1, right? And you ignore that. You wait for it to do this, and you wait for it to do that, and then you get an H2, which basically is an M pattern reversal underway for the bears. The bears think they've got control. The stop loss is there. The stop loss is there. The bulls then fight back from here, and that is leg 2. Yeah. So I'm working on on a way in the indicator to get these labeled up for him. But it could be that you go H1, push a little bit more, pull, pull, push, and that becomes H2. Yeah. It doesn't have to be lower, but it has to be the second green candle. Yeah. When you're bull, that says, here we go. So you take a break of that and you take that second leg off. So that would be a flag break, if you like. Yeah. It's interesting. It's bringing it all back, revisiting all the Al Brooks stuff. It's who I learnt price action reading off initially. I think everybody does. Al Brooks is the godfather of price action, isn't he? But everything you see out there about naked price action is all come from Al Brooks at some point. You know, the inside bar, the 2 inside bar, the 2 IB setup. It's all Al Brooks' stuff. Symmetrical triangle breaks are low time frame 2 IBs, you know, or a 2 IB on a high time frame is a low time frame symmetrical triangle. It's all, you know, it all originates from the same theory, the same research, isn't it? I'm so surprised at how many people trade prop. I think it's very stupid. Trade your own money. Yep. 100%. I trade prop because I like trading prop. Trading's boring because 90% of the time you do nothing. So we are very close here to getting a bear signal. Yeah. So if this closes bear, this candle here, in the next 1 minute, this will come up and flag you should be short. And the reason you should be short is because we've had 3 strong closes. Yeah. So although we are going up, we're above the moving average, it looks really bullish. The first decisive move of the day, where you've got 15 minutes of solid, strong selling price action, is actually by the bears. So in theory, and as Al Brooks' theory says, when we get to candle 18, which you will see will be painted in red, because it's an important one, that's 1.5 hours into the session. What's going to happen there is the high or the low of the day is in with an 80 to 90% probability. So there right now, if this closed like that, you would be saying when we get to candle 18, if we haven't broken that high, there is an 80% probability that we've just reached the high of the day. Therefore, what are we going to do today from a daily candle perspective? That is the wick high, and you're going to put a bear candle in today, which means that we're going to do what? Test the previous close from yesterday, which gives us a bear candle. Okay, so there is your H1. Yeah, so that was looking interesting, isn't it? The hourly candle close is always like super fast, right? But that was looking like a big bear candle with 1 minute to go. And now we're bull. This is why you always wait for candle close. So there's your H1. So an aggressive entry would be to take the high of that and stop under the low, because if this is an H1, leg 1, leg 2 starting off, you shouldn't break that low. You should be safe there. If you want to be safer, probably go under candle 6, which is that bear move. Yeah. So if the bulls are in control, that bear should not take control. So that would be an aggressive entry. That would be a conservative entry. However, the better entry is to wait for them not to take this high out and this to accumulate a bit or pull back a bit or do something where we get some more bearish price action coming in. And then the second time the bulls try, if they break again, it means the bears have lost. Yeah, because the bears are trying to pull back, the bulls are fighting back. If the bears try again, we know who's in control today, the bulls. So we take that second one, which is called the H2 entry. That is your super, super safe, high strike rate, super duper text, whatever you want to call it. Apparently. I don't know. I don't study it that much, but anyway. I have been studying it over the last week because I've been building this for him. So anyway, Why would you get long US dollar ahead of PCE when CME futures are only pricing in 0.80% cut? 80% of a cut, you lunatic. Why are you calling me a lunatic when you don't understand my trading strategy? That's what I would say. Somebody that can predict the future there. Can I borrow your time machine? Are you going back to MT4? EA is going to have updates and so on, so I can stay on MT4. I'm not moving anywhere. I've said this before. I will always develop for MT4 and MT5. What I use is nothing to do with you. It's me. You do what you do. I do what I do. If you want to use MT4, use MT4. If you want to use MT5, use MT5. I use MT4 because I prefer it. I tried using MT5 for analysis. I can't bear it, and I've just demonstrated why. But EAs are trading on MT5. So all my EAs at the moment are trading on MT5 because I transferred all my funds into MT5 accounts, so I haven't got a choice. When this account goes flat, I will probably go back into MT4. Doesn't matter. It's the same thing. At the end of the day, it's just charting software. There you go. There's your long, potentially. So if you are taking that trigger long there, that's potentially your second leg starting. But if that leg doesn't start, and we do that, we're creating a flag break long. But don't forget, we're in a potential range at the moment because we haven't had any concisive bull, solid 15 minutes worth of solid bull or solid bear action. This was really close. There we go. And also, if you took the ORB today and you wanted to add to your winners, that is your add point. Yeah. In theory, with Al Brooks's stuff, if you get a trend day, which obviously we know the market trends less than 30% of the time, but if we do get a trend day, once you get that first trade on and you see the H1 or the H2, you take an add and then you keep it on. And then when you get the H1, H2, you take an add, you keep it on. You see the H1, H2, you take an add, you keep it on. At some point, you want to pull the plug. But the idea is you're just going to trail your stops behind those H1, H2s because these are your gatekeepers. Yeah. If the bulls are in control today, when the bears have finished trying to get their money back, you shouldn't invalidate this low. If you start then going into a trading range, obviously you will invalidate that low. And if you're in a trading range, the trend is over. Therefore, you want to be out anyway. Yeah. I've literally been building this indicator and it's come flooding back. All the Al Brooks stuff that I've learned over the years is really interesting. Just what I do on a daily basis. But when you actually see it like plotted out and you actually talk through candlestick by candlestick, it's a really good way of doing the education. How's the correlation EA coming along? This is trading at the moment. This account is trading on the correlation EA. It's in live testing at the moment. So this is all taken with it. So it's working. But that is MT5 only. I can't do it for MT4 because it's multi-symbol EA. You can't backtest it. So there's no point releasing it for MT4. So that would be MT5 only. And that's actually a reason why I will probably stay on MT5 with the position trading account because I'm going to use the correlation EA. But I haven't... I'm waiting for it to do some live drawdown control. It's on the 26th of November. Yeah, so that closed the whole trade out. I'm basically, and this is the difficulty with live forward testing, is I'm waiting for this to get into a position where it's going to have 3 trades on a symbol, so that I can test the automated drawdown control, which obviously the logic is exactly the same as in the trade portfolio dashboard. So it uses the auto close and the drawdown control system that is built into this in that EA. But I haven't got to an opportunity where I can test it because we haven't got into enough drawdown because the market's just been making money. So I'm waiting for another trade to come on here, basically, so I can get I can test the drawdown control. So once I've got the live drawdown control test done, I think it's probably ready to go. But not quite there yet. Okay, so right, is that 30%? Maybe. So if this closes bull within 30% of that high, we will be going all in long, as Al calls it. It's a really interesting. So if any of you that struggle with psychology, basically, Al Brooks' stuff is really good at sort of fixing the problem people have psychologically with small time frames specifically is they revenge trade. And the typical revenge trade looks like I'm going long, I get stopped out. I'm going short, I get stopped out. I'm going long, I get stopped out. I get aggressive and I start doubling my risk and everything goes pear-shaped. Yeah. So what this kind of bias strategy he uses is if you get it, say, always in long, i.e. you get 3 candles which push like that, you basically do that. So if you go long and you get stopped out, you go, I was in too early, I'm going to take a long again. Yeah. Although your bias does change depending on what obviously happens next. You could get 3 massive bear candles and obviously you then need to be bear bias. Or you could find a resistance where we reject with multiple pin bars and then you get a bear move and it's a big, strong bear move. Then you'll probably change your bias. It doesn't have to be 3 candles in a row. But what it does do is it stops you constantly flipping, which is what is one of the big causes for revenge trading. Is the constant, right, if we're not long, we're short. No, we're not. We're just in a range. We're long and short all the time. So you don't trade it unless you're going to short the highs and buy the lows. So it's interesting. From a psychological point, it's really helpful for traders that struggle with that. If you go and learn Al Brooks' stuff, 3 books. You'll need to read them 4 times, but there's 3 books. Or do his course, which is about $400. You know, this is how you know good educators, right? He doesn't sell his course for $4,000. I don't sell my course for $4,000. I sell it for £40, right? £50. He sells his course for $400. He's been trading for 35 years. Yeah? Who are you going to listen to? Someone that sells something for a small amount of money because they don't need that money to live on, who's been trading for a long time, or somebody that's got a YouTube channel which is 1 year old, is 18 years old and professes to be making £600,000 a year from scratch. He sells his course for $4,000. Which one do you would want to go for? Just saying. Visitor, thank you very much for the $10. Pint of beer for me. Thank you very much. I could get 2 pints with that. And it's Friday. Thank you very much for the $10. Very much appreciated. My intention is to use the EA for trading in fast markets and manual ORB. So would like partial close, albeit I do have the dashboard to quickly the quickly configurable percentage risk is ideal. Yeah, so I can do that. I just what I don't want to do with this, and this is the danger, right? Is the more functionality you have with something like this, the more buttons you have, the longer the thing gets and the more intrusive it becomes on your chart and the more probability there is of hitting the wrong button. And I'm not going to introduce confirmation pop-ups, yeah? Because the point of pressing that button is I want to do it now. I don't want to go, oh, yes, I do. Sorry, I was there and now I'm here. Yeah, doesn't work. So the more buttons you add in here, the bigger this thing gets, the more intrusive it gets, the more difficult it is to hit the buttons. And the other thing is, these buttons are fine because these aren't critical for trading. these are drawing buttons. So if I press that, something disappears, and I press that. It's like the last week's high. Yeah, if I press that button, this green line disappears when it ticks. Obviously not ticking at the moment. There we go. So that disappears when it ticks. With these buttons, if you make them this small, because you need 16 buttons, one for break even, one for break even plus one for trailing stop, one for a trailing stop that is tighter, one for this, one for that, partial close, 25%, 50s, 100% partial, whatever it is. Yeah. If you have tons and tons of buttons, either the dashboard has become massive or you need to make them tiny. If you make them tiny, you're going to hit the wrong ones. If you make them big, you're not going to be able to see the chart. So there's a kind of sweet spot you've got to find in what it does, and what you can put into it to make it realistically work. So I don't know. I'll have a think. I mean, for me, if you look at the price action toolkit and what that has in it, I've been using this for ages for scalping, and I just wanted something that's a little bit more compact and less functional, basically. But buy stops and sell stops last candle. This is absolutely perfect for Al Brooks's stuff. Yeah. So what I was just saying, if you get 2 downs and then 1 up, that's an H1. Yeah. If the wick's there and this is where you are and that's where you want your trade to take, if you press that button, it will just go bang, bang. Yeah. With my new one that I've just built, I've got to press the buy button. I've got to adjust the stop loss and then adjust the pending order and then press a button. So this is much faster execution. It's got a lot more functionality in it. But if I introduce all of these buttons, yeah, and look how many there are. 1, so that's close the most profitable trade for if you're on multiple. That's cancel pending orders. Buy stop above the last, sell stop below the last, buy stop above the current, sell stop below the current. Break even, move to break even, obviously. Break even average price if there's multiple trades on. Yeah. Modify the take profit. Will automatically move all take profits to the same level if you've got multiple trades on. Modify the stop loss to the same level if you've got multiple trades on. Close the whole lot. Buy at market and sell at market. Yeah. Absolutely tons of functionality. But look at the size of that, right? And it all appears down the right-hand side of the chart. If I stick all those buttons on this, either it's going to be that long, yeah, or I can make it wider. But that's now taken up 25% of your chart. Admittedly, you can minimize it. So I guess there's an argument for adding the functionality in and then just going, okay, let's guess, yeah, maybe. I don't know. I'll have a think. I'll have a think about it. Consider having a $20 a month tier for people who don't want to participate in education but want to listen to your rambling. This is the most interesting part. Yeah. I can't add another membership tier. It's 50 quid. It's not a lot. It's Vitali. Yes. Okay. I thought it was, but I can't remember because everybody's names are changed. Thank you, Vitali. Much appreciated. Right. So DAX obviously pullback we've got on the go potentially now. So this could well be higher day going in at the minute. In which case, obviously, we'll take the break short. But we are holding at the moment at this level. So we'll see if we break down through there. If we break down through there, you want to look for a measured 50% retracement, possibly back to the 5-minute open. Then we might start a second leg. But it could just go into an accumulation here. So don't forget, there's no real, that's the only strong move we've had today. We've had sort of 15 minutes of buying, stuck, 15 minutes of buying, stuck, can't make a new high, can't really break down either, can we? So there's not really any competitive advantage either side today. So this is candle 16. So for Al Brooks's stuff, it's candle 17, candle 18. 18 is the 1.5 hour candle. So 1.5 hours into the session, likelihood is you've either had a good move and you found the low of the day, or you've had a move like this and you found the low or the high of the day. Yeah, with 80% accuracy. It's very unlikely when you look at outside bars, yeah, outside sessions specifically, but outside bars, yeah, there's a 10% chance of an outside bar, which means there is a 90% chance that one of those highs is going somewhere, yeah? So that candle 18, hour and a half into the session, you have usually either got a bias formed, or if there is no bias, let's say, for example, we were down here on candle 18, you would have to say either that is the low or that is the high, and you pick a bias. So if you're thinking this M pattern reversal is high of day, you're short only for the rest of the day. If you're thinking this is a pullback to the moving average for a long, that is your low of the day, you're long only for the day. But one of those is going to get popped. Yeah. So that's why that candle 18 is the critical number. 1.5 hours into the session, you're kind of 20% of the way into the session. Yeah. So you're going to get a move. So it just controls the time that you have and the session to make it more obvious for what you should be doing next. It's good theory. It's subconsciously what I do, but when you actually see it in rule sets, it's like, well, that's obvious, but it's not obvious to people, is it? When you're new to trading, or you're new to price action, specifically naked charts, it's not obvious, is it? So that is an M pattern reversal, potentially. But if you put the reversal alerts indicator on here now, what you've got is a support block here. Yeah, support block. And it's not reversing, is it? So this is why the reversal alerts indicator works the way the reversal alerts indicator works. Because if this candle now closes bear, that is a break of structure, M pattern reversal. But these last batch of sellers are not able to break through where they tried to sell last time and the bulls took control. So this is an accumulation. Right, so that here, if I understand it correctly, that would be your H2. So a break of that high should create a pop. So what we've done is we are basically flagging. So you take another long there and you stop under the lows. Either works or it doesn't. We're also waiting for the moving average to catch up. Yeah, moving averages catch up in accumulations, force market higher. So with a moving average, the way that moving averages work is when price is pushing parabolically like that, one of two things happens. Your moving average is coming up. Price will either pull back aggressively to the moving average and continue, or it will accumulate, wait for the moving average to catch, and then go from the moving average. So those are the two things that happen on moving average bounces. So this, in this case, would be the market waiting for average price to catch and then pop, rather than pulling back into average price and going aggressively. So that's your sawtooth pattern in a parabolic trend, or it's a trend with multiple legs, flag breaks. This is why the moving average is important. Intraday. So why wouldn't my crypto trading platform let me buy at the current price? I don't know. Don't trade crypto because it's a pile of shit. something really interesting, right? You know how cryptocurrency is encrypted, 64-bit encryption, 128 encryption, blah, blah, blah. And the reason it's so safe and secure is because it's pretty much unbreakable. They said it would take a computer millions and millions of years or processing hours to crack this encryption. What do? Invent a quantum computer that can do millions of years of calculations in minutes. Crypto is about to go pop because the quantum computers that they are building now, and obviously if somebody nefarious gets hold of one of these, Putin, I don't know, he can basically crack all crypto encryption. Yeah? All the crypto. All of it. So he basically takes control of all cryptocurrency. That's why I don't trade crypto. Nobody can tell me who invented it. Nobody can tell me how it works. I know kind of how it works, but nobody really knows the underlying buying and selling of it because it's anonymous. Yeah, no idea how many banks are holding. No idea how much whales money is in there and how much unwhale money is in there. It's just made up. Trade stuff that moves because of a reason. There's a fundamental reason. There's 40 companies here which have an intrinsic market value that creates price movement up and down. Yeah. Foreign exchange is the differential between currency price, the Canadian dollar and the Swiss franc. Fully understandable. Totally logic. Crypto, no plan, no clue, nothing. It's just utter nonsense. And that is why you couldn't place your trade, because nobody knows. Just stop doing it. Why wouldn't banks also? It's like banking has pretty similar safety measures. Banks do trade crypto. They do hold crypto, but how much? Yeah. Who's the guy, right, that owns most of the cryptocurrency in the world? And what is he doing? What's his personality? No idea. So who's to say at any point he couldn't just go, screw this, and kill everybody that's got crypto? Yeah. He's got more. There's somebody out there, right, like Elon Musk, that holds more of it than everybody else on the planet. He can at any moment liquidate anybody holding crypto. He could also buy every piece of crypto out there and not impact his wealth. Yeah, when you're trading something that is intrinsically linked to individuals, it's 100% manipulatable. When you're trading something like forex, where you have 10 major banks and institutions around the world that have power to move it and no one else, you have differential of opinion, which means you have more fair market movement. When you're trading stock indices, there are intrinsic tangible assets allocated to these prices. In the DAX, the German motor industry, which is the majority of the DAX, Mercedes have plants which have monetary value applied to them. They have stock which has monetary value applied to it. And they have services which are required by people, which create supply and demand. Everybody understands how all of this works. With crypto, Elon could kill everybody any second. Yeah. And all of these crypto exchanges out there, yeah, are dealing anonymous transactions. Who's to say they're not taking all of your money? Yeah. Why has Coinbase got such a massive market value? Yeah. Very easy for it to manipulate the market, isn't it? Just don't do it. Stick to stuff that works. This has been traded for hundreds of years. And yes, crypto might become the new thing that we trade in 100 years, 50 years, 25 years time. But I can see quantum computing destroying the entire cryptocurrency world, because we are creating computers that can crack codes that haven't been crackable. Yeah. Do not put any money in crypto, right? Unless you want it gone. The only way to keep your cryptocurrency safe is to stick it on a hard drive and keep that hard drive with you, which becomes a physical wallet which can be stolen. Why not just put money in the bank? Same thing. Same thing. It's scary. But you look at some of the like the quantum latest quantum, can't type, quantum computer achievement in time taken, right? Massive time saving over classical supercomputers for specific tasks. Google's Willow chip for random circuitry, blah, blah, blah. Willow quantum chip performed a complex benchmark calculation in under 5 minutes that would have taken one of the world's fastest classical supercomputers an estimated 10 septillion years to complete. That is 10 to the power of 25 years, and it did it in 5 minutes. If they're saying that cryptocurrency cannot be cracked if you went at it for 100 million years, what I say is one of these things is going to crack it in 5 minutes at some point. So do not put your money in something that is that unstable. October 25, Google announced a breakthrough in its quantum echoes algorithm, which ran 13,000 times faster on their Willow chip than the best classical algorithm on a top supercomputer. I mean, it's just nuts. Technology has been used by Ford to reduce vehicle scheduling times from 30 minutes to less than 5 minutes. Well, that's just rubbish, isn't it? There you go. Google's earlier Sycamore, and this is in 2019, completed a specific computation in 200 seconds that would have taken the most powerful supercomputers at the time, 2019, 6 years ago, 10,000 years, and it did it in 200 seconds. No one can tell me how long would it, let's look at how long. How long to crack a password. That's not safe at all, is it, obviously? How long to crack a crypto encryption? Standard computer versus supercomputer versus quantum and the attack method used. Yeah, we know what this. I just asked how long. So it's 128-bit encrypting keys, a 256-bit would take, right. So a 256-bit encryption with brute force, which is just random, trying different combinations, would estimate to take millions of years with the current hardware, or even 10 to the power of 32 years, depending on the calculation, right? That 10 to the 32, what did that last one just say? 10 to the 25. So what are we? 7 of those away from cracking crypto. Right now. Don't trade stuff like that. Trade stuff you know and understand how it works. This stuff. Just, there's plenty of it. We've got 28 forex pairs. We've got 5 tradable stock indices. 6 if you include the yen, the Nikkei. You've got stocks, and you've got obviously everything else. There's billions of things like stock markets. We've got thousands. The Russell's got 2,000 stocks in it, for God's sake. If you can't find an opportunity in 2,000 symbols. Okay, right. So as you can see on the indicator now, candle 18 has just closed. Today's high has been painted in and today's low has been painted in, which means that with 80% probability, that is your low of the day or that is your high of the day. So if we crack that, that's your low of the day, which means we're not coming back here with a 90% probability. 80% maybe, but 90% probability most of the time, which means today we're not going to fill that gap, which means that next week, potentially, we're going to get a bear move to fill that gap. Yeah. It's understanding probabilities. But we are getting closer and closer. Yeah. So, yeah. Don't get me wrong. There's nothing wrong with trading crypto. Anything that moves, you can trade. Every single symbol on the planet, whether it be crypto, stock, FX, indices, whatever it may be, futures markets, options, the whole lot. All this thing here, is a representation of price over time on a time frame. Yeah. The probabilities of this becoming a bear candle or a bull candle are 50% every single time. So it doesn't matter what you trade, your probabilities and odds are always exactly the same. The way that you make money is by wrapping risk around a 50% probability with a higher risk reward ratio. That's the only thing in trading you can do. That trade I took there has a positive R if it works. If it doesn't work, it has a negative 1R. I have no idea if that trade is going to work or not. The chances are 50-50. Right now, if it breaks that high, my probability has increased to probably 60-40 because I know it's not coming here. So all I've now got to worry about is it's probably going to continue to do that, but I'm just worried about whether or not it will do this. So my probability now is, are we going to do a 50% retracement on that leg, which gives me a higher strike rate, or not? It's maths. Everything works in trading around mathematics. If you don't understand the mathematics of trading and risk reward, which is why we have this here, you'll never make it. And now if you want to pass a prop firm evaluation, that's what you need. Just maths, isn't it? At the end of the day, if you've got a starting balance of that and they tell you to get that and the maximum of that you can have, and it trails every day, and you've got to pass it within that many days, and you're going to be taking that many trades a day with that much risk and risk reward ratio, you will pass. If you drop that down to there, you'll still pass. If you risk that much though, you won't pass. If you risk that much, you'll probably fail. Yeah. If that does that, and that does that, and that does that, you'll pass. And if you do that 20 times, you'll fail 13 and pass 7. It's maths. The whole thing is maths. If you understand the maths, you just make money. It's not hard, is it? It is hard, but it's not hard. This is well said. Could not explain any better. Good. A lot of adjustments. It's not easy. Nothing's easy. Nothing worth doing is easy in life, is it, basically? If you want to be a bin man or a road sweeper, that's easy. But if you want to make 6 figures a year, it's not easy. You need to learn stuff. There you go. So there's the 3 arrows, right? As I was talking about earlier. So by Al's definition of a always in long day, that has just been created by those 3 candles there. So the bulls there have had their strongest run so far of the day into candle 18, which creates either the high or the low of the day. Now, because that has happened at candle 18, if now this forms a high and the bears now do that, I would say with 80% probability, that is your high of the day just gone in, and we are going to go bear. So these next sort of 15 minutes of price action, not invalidating that low, are going to be critical. If the bears can rally out of that high, we are in a trend, aren't we? But there's a great example of that entry there, that H2, H1 entry strategy. The H1 worked in this case, but stalled out of those highs. H2 worked beautifully, but also stalled out of those highs. But that is now literally creating a trading range. So this is your battleground. Either the bulls are going to win or the bears are going to win. What's the probability? Always. Hopefully the bulls win. That's what I want. In fact, I'm going to make sure I don't take 2 losses. Bloody hell. Is Michael in here? Are you in here, Michael? That P&L you've shared, what is that? That's the ORB strategy, is it? How did that happen? Good recovery, but how did that happen? Wow. April. What happens in April? We'll have a look at that in the live room this afternoon in the members stream. So if you're a member, obviously we're in the members this afternoon at 2 o'clock. So we'll do half an hour of analysis this afternoon on FX. Then we'll trade the open, and then we're going to do some other stuff today. Might do some price action. Might do some back testing on ORB, system parameter permutation testing this afternoon. Okay, holding up. at the moment. So we've got a lower low, a lower high just gone in there. So if the bulls are going to stay in control on this nice push, this candle should not get invalidated here. This whole level here should hold. If that doesn't hold, the bulls are basically out of power, aren't they? Basically, so either we've run out of bulls or we've met an iceberg order in the bears. So this order that first came in and stopped this bull run, basically they added to the shorts, they've added to their shorts. So either they're going to keep adding to their shorts and we aren't getting through that level today, and in which case then obviously the market will turn tail and run. So the buyers will take profit, which causes them to sell. And then the sellers will see a big move coming in, which will cause everybody to sell, and it becomes a self-fulfilling prophecy, basically. So at the moment, we are 2-bar pullback, but that is your line in the sand today. If that goes, I reckon that's the high of the day. So I'll be looking for shorts. This is where this indicator, that I've built for this guy comes a little bit moot for me. My understanding of the market would be that. So if this now puts in 2 candles and the third one is a bear candle, but this one isn't closing within 30%, that's not going to shift to short. That's just going to say long still. And we will also have broken down below the moving average there, which would also indicate shorts to me. So I'm not convinced that this is actually that useful, because it could well just give you a bias which isn't actually accurate, really. What he wants it to do. Started a new 50k instant funded account. My third one, nice. Looking good with fixed order size and 1 pair. Excellent. On the left side, you've got the value gap. This is actually a propulsion gap, I call it. So you're obviously an ICTer or have studied ICT. This candlestick here is called a wide range bar, WRB. It was developed by a man called Mr. M.A. Perry back in 1980s, before ICT even knew what a trading chart was. There we go, breaking those lows, bears back in control, potentially. So yeah, that was all created by a guy called M.A. Perry. ICT copied it and changed the name of it to an FVG. Before ICT came along, my mentor that I learned from over 10 years ago called it a propulsion gap. At the end of the day, it's a large bank order. So all this is identifying on the chart that there is a large order being placed by an institution, meaning that there is a previous batch of sellers that have just been rolled over. And all these selling institutions have executed stop and reverse orders to drive price higher. Therefore, if the sellers in the institutions have flipped long and the buyers that are long are obviously long, we have an imbalance long, which means that when we come back to this area, which we will do because some of the sellers here will have scaled in to average out of those trades, we will likely come back out to the upside. That's all that is doing. So if you look on any chart, this is basically my support resistance propulsion indicator, this one. So this draws loads of stuff on the chart for you, including propulsion gaps and weekly high-low levels and all this sort of stuff. But basically, if you look back, yeah, all these grey ones are old propulsion gaps. Yeah, that have all been traded back into. Yeah, all these. So basically, all the market does is it goes up and it goes down, it goes up and it goes down, and it moves through time and it goes and fills orders. So these are all the orders to the downside that need to be filled. Yeah, so these are targets to aim for. So in position trading, we use these for our exits. So here is the indicator's not on this chart, but that is a large propulsion gap there. Look, that move there, it's a large propulsion gap which broke that low. That is where I exited those longs because the market traded back into that propulsion gap before they resold it. Yeah, we've got a propulsion gap there, which the market traded back into. I'll look at it on the H4 on here so you can see them. Yeah. All the market does. Creates propulsion, breaks support, tests support, bounces. Yeah. Breaks support, tests support, bounces. Not really great on that one. But there you go, there's one. Test. So this is the, if you want to trade price action, this is the indicator. Yeah. Every single chart you look at, not so much the ends because they're trend, but yeah, if everything's grey, yeah, it means that if when the grey thing was formed, you press the buy button and you continue to press the buy button until it came back and filled the grey bit, you will make money every time. Yeah, and this is what we do in position trading. So the position trading bootcamp, this is what we use. So in position trading, we wait for a reason to sell and we sell to propulsion. And if it doesn't work out, we scale in to propulsion. So this is why our strike rates are so high, because you load, all we're doing is targeting where the market's going with 80% probability. Why did my win rate just suddenly drop down to 49.2? So I moved my mouse wheel, which changed it from that. So basically all we're doing is we are saying if the market goes up, like in this case, the market's gone down, we go long. Where are we going long to? There. Yeah. If the market then continues, let's take this one as an example, right? That's not a good example. Let me use a better example. So in position trading, let's say we go long there, right? And we target there, this propulsion here. Yeah. It didn't work out. So what we do is we wait for the market to go down. We add more size and we target this propulsion. It didn't work out. We wait for the market to go down. We add more size. We stay targeting that propulsion, or we could target that propulsion, or we could target that propulsion. Whichever one is above our average price, we target. When we get to it, we take the money. That's all position trading is, scaling back into propulsion, because this is what the banks and institutions do all the time. So if you want a bias on the CAD Swiss right now, should you be long or should you be short? Because there's no targets up there. There's a shed load of institutions caught offside here that need to scale back into that position to finish what is known in the industry as unfinished business. You probably heard the term, if you trade futures, unfinished business. Unfinished business is in imbalances in market books where we have short orders on and we couldn't get out of those short orders. So we scale into those short orders and drive price back into them. This is what I said. There's 10 institutions really of size, Citibank, Barclays, HSBC, you know, the big guys that have got enough money in the market maker's desk to actually drive this up and down. It takes about 100K to move a candle. Yeah. There's $7 trillion a day goes through this market. You can't do it as a retail trader. So you need to wait for the banks to move the market. Because you don't know where the banks are going to move the market to, most traders just go in, out, in, out, in, out blindly and get killed. If you know where the banks have come from, you know where the banks are going, you know which direction to trade. That's all you need is an indicator to tell you that. This is why ICT picked up the concept, because it works. Yeah, but it was developed by M.A. Perry. Look up M.A. Perry. Yeah, this shows you how long ago this guy invented this, right? Now, does this look like a modern website to you, or does it look like something built in the 80s? Oh my God, he's had it revamped. He's gone onto Cloudflare. No, it's still the same website. This is what ICB basically stole. Yeah, and he made his entire concept around someone else's work. Plagiarized it, if you like. But he renamed it. Yeah. He renamed it to the FVG, which is not. It's a wide range bar. But it's not. It's a propulsion gap. You call it what you like. It's the same thing. Yeah. WRB, wide range bar, propulsion gap. But, you know, the thing is these days, and I do get it, people pick up on what they're taught. So if someone new to trading found me first, they'd call this a propulsion gap. I was taught by a mentor who called these propulsion gaps. That's why I call them propulsion gaps. ICT was found out about the concept of the wide range bar from M.A. Perry, but he decided to change the name of it to FVG. And he just happened to land on the internet at the right time on YouTube when it was all blossoming and everyone was getting into retail trading with a concept that no one had seen before, because M.A. Perry was under the radar. But M.A. Perry was taught by a floor trader back in the 1960s. It's all the same stuff. Nothing changes. As long as markets move up and down through time, and there is a thing called greed, and supply and demand, markets will move from propulsion to propulsion, because all it's doing is fulfilling orders. Banks and institutions have to fill orders. Orders are at these levels. Orders are at these levels. Orders were here, orders were here, orders were here. The market moved away and filled those orders. It doesn't fill the orders on the same day because markets move in quarterly cycles, which is what we call institutional moving averages. Monthly and quarterly cycles, which creates trends. This is all you need to do in trading. This is the bit that people can't focus on, unfortunately, and I couldn't focus on for many years. What you need to focus on is how the markets move, why the markets move, and then formulate a mathematical strategy around extracting money from those movements, because there is no indicator that tells you which way price is going, because it can't read the future. So therefore, you have to know where price has been to know where it's going. If you understand why it did this, you'll understand why it will do that. But you don't know when it will do that. You can't time the market. And what does every indicator, every strategy on the planet attempt to do? Time the entry so that you get a high strike rate. What is the one thing that's impossible to do? Time a random market movement. Therefore, you will fail. This is why position trading works. Because we're not timing the market. We're knowing where the market's going and we're waiting for the market. We don't try and time it. We just wait for it to do it. This is why this is hard. Stopped out on both of those orders. Why? Because I was trying to time it. Very hard to do because it's random. I actually called exactly what it was going to do, but I didn't take the profit because the risk reward required more. And if I'd have taken the profit there, I'd have a low risk reward ratio, which would ruin my edge. So I don't. I wait for the next setup and I take the next one. Anyway, good lesson today, isn't it? This is how I was imagining the good charts with this many gaps. Break, test, bounce. It will magnet, I'm subscribing. This is the most clear explanation ever. Excellent. So if you go to here, no, seriously, go to here. That's the members website. So if you want to do, basically, this is my 20 years worth of experience, right? This is all the stuff that you need to know. This is how to trade news. This is how to trade prop. This is how to position trade. If you watch those 35 hours or whatever it is, there's nothing else you need to know. That's it. I've done this for 20 years. I've done every course under the sun. 90% of it I've thrown out the window. 99% of it I've thrown out the window. Anything that actually works and makes sense and is logical is there. Other than that, it's pure luck. Look at that. Stopped out there. So we are still always long, according to this indicator. Whether it's right or not, I don't know. We'll find out. This is why whenever I was trading, I did 3 trades after 5 hours of watching the charts. So if you keep your trades light, wait for the setups. The best thing to do is to wait for setups. The discretionary trading is great, but you've got to have a mechanical reason to discretionary trade. If you're trading H1, M5 mean reversion trades, this one you got into there, you're still in it. You've been sitting in it for a week and a bit. There's nothing you can do about it. But if you wait for the setups, the profit will come. but it's not going to come all the time. So either you use a stop loss and a risk reward strategy that has a mechanical edge over time, which will cause loss after loss after loss, or you don't use a stop loss and you position trade, which is what the banks do, and you scale into positions, adjust your price to a more favorable level and wait for the market to move. That is by far the best way to make money trading, which is the position trading bootcamp. Yeah. If you're struggling finding a profitable strategy, switch to position trading. That will teach you how the market works. And that is the best lesson you can have. And then you can go back and find stop loss based strategies with a full understanding of why you're getting stopped out. Yeah. When you remove the stop losses from your strategies, you will just make money, because the only thing that stops you making money is a stop loss. It stops the profit. It stops the loss, doesn't it? It makes the loss, stops the profit. Yeah. 1.3% of drawdown is neither here or there. I've just lost more than that trying to scalp the DAX this morning. Yeah. And I've been in these trades for weeks. But what am I not doing? Taking loss. Green. Yeah. So position trading is a totally different methodology. It's the way that banks and institutions scale in and out of these propulsion moves. Yeah. So this, like I say, it's all it does. Look at any chart. All it does. Moves up and down to propulsion. Where's it going? There. When? No idea. And if it doesn't, what's it going to do? Collapse down. What's it going to do then? Create a propulsion gap. So what do? Change our price to something that is below that propulsion gap so we can target it and exit with a profit. When? No idea. Doesn't matter, does it? What we know is that this is all that happens. So that's all we do. But you've got to keep your risk at a position size that will stop you blowing your account. Yeah, that's what the position trading bootcamp teaches you, how to scale in and out of market movement. And that understanding of probably rule number one, you have no control over this thing, means you will understand why you lose money. I've lost money today because I got the idea right and the timing wrong. So what can't I do? Time the market. What do I know? Where it's going? How have I lost money if I know where it's going? Because you can't time the market. So take the timing out of the equation, the money just happens. Very simple. But who knows how long it's going to take? Eventually it will, yeah. Exactly. Doesn't matter how long it takes. Every time frame, same. Yeah. You get orphaned propulsion gaps. Yeah. So there will always be parabolic moves caused by fundamentals, which means that you will not come back to these propulsion gaps. But this is why we don't care if we come back to that one or that one. We come back to whichever one it comes back to. So when you scale into a move, so if you get in short here, targeting that, see that kind of, yeah. And it doesn't work out, you get in short here, targeting that. Yeah, and if that doesn't work out, you get in short here, targeting that. That did work out. So you take that off at a loss, you take that off as a break even, you take that one off at a profit. What have you just done? Broken even. What have you not done? Lost 1R. So by eliminating the losses, your P&L automatically goes up. Because the reason P&Ls go down is because of that. Eliminate that, you're left with that. But what you are going to have is drawdown all the time. So your account will constantly be in negative open drawdown. And this is what banks and institutions call risk. Yeah? Everyone else in trading is taught, you get in, you place your risk. If it gets stopped out, you take the loss. What banks do is they get in, they take their risk, it goes down, they get in again, move their price, take more risk, moves down, get in again, move down, get in again, move down, take more risk, reward. That's what they do. You won't see a bank sitting there going, oh, just taking a 20 grand stop loss. Oh, just taking a 20 grand stop loss. It's other people's money. Yeah. What they do is they go, we're in long. Market maker, can you move the market up? We need to get back to this order. No problem. because they can do that. We can't. So if you know where they've come from to create that volume gap, if you like, that imbalance in their books, you know where they're going to need to get back to rectify that imbalance in their books. And if that imbalance can't be rectified, they will move to a new area which makes them profit, which will be the next imbalance. So all the market does is it moves from balance to imbalance. Most people call it accumulation, impulse, accumulation, impulse. Every impulse is a propulsion gap. And every impulse creates a void of people that were the opposite direction who are now in drawdown, which need to get back to a level where they can exit that with no loss. Banks don't lose money, do they? Banks just print money. That's what they do. They make money non-stop. Why do they make money non-stop? Because they don't take losses. It's very simple. But you've got to survive these, yeah? And you'll get points where you just have to, you get it so wrong and you can't, you're not a bank, basically. Banks have got almost unlimited pots of cash. We haven't. So you do get to points where you will have to stop and take a loss of X%, whatever that may be. And you'll draw a line in the sand. But the dashboard does that for you. So this is all built and configured so that you can take losses, you can do drawdown control. It does everything you need it to do to just manage your account for you, basically manage your whole portfolio. A prime example, look, took a loss on that, took a break even on that. Where are we now? Back above my second entry. Am I right? 100%. Is my timing wrong? 100%. Have I lost money? Yes. Why? Because I can't time it. Some days you time it every time and you just go, I'm off to the pub. Other days are like this, and the market is like this at the moment, unfortunately. So it's still long, but ORB is still in. So ORB has just come back to here. If I hadn't added, I'd be in this still, but I got greedy. So yeah, we're still on our way to target. I still think that's lower day, potentially, but equally, this could now go bear from here, and this could be market structure shift back down to the downside. We will see. At the moment, we're going nowhere. Anyway, I'll shut up now. I've been going on for far too long this morning. So back this afternoon for members at 2 o'clock, not 2:30. Okay, so times have changed. We're back at 2 o'clock this afternoon. We're going to trade the New York Open. We'll do FX analysis. We'll have a look at how this week's gone. We'll go through the position trading account, look at all the position trades that are open. And then we might do some back testing and other stuff this afternoon, but we'll play it by ear. Right. I'll leave it there. So we trade in between them and we increase the initial 50-50. Well, yeah, you're going to increase your strike rate because you're not taking losses. So it's very few people out there that can get a 70 to 80% strike rate consistently. Very few. And like, this is why I created a position trading bootcamp, to help people. You keep hearing this thing that there's 5% people make money in trading, 95% lose. Yeah. The reason 95% lose is because they are incapable of keeping their emotions under control when they lose money. Yeah. If you eliminate the losing money, you eliminate the emotion. If you eliminate the emotion, all that is left is mechanical trading. And if you just do that, you will make money. That's it. It's literally all it is. So you increase your strike rate because you don't take losses. But what you do is you do not use 1% risk per trade. That's ridiculous. It's far too much. The more money you got, the bigger the moves you make on the market. Yeah. The more money you've got in position trading, the more money you make as well. Money makes money. This is the thing. I'm not going to sugarcoat the fact. If you ain't got 10 grand in the bank, you can't do this. Yeah. You got to have 5 minimum, 10 more likely. Yeah. Otherwise, it's pointless. If you're going to use less than that, you can use stop loss based strategies on low time frames, but you got to have your psychology there, and that means you become one of the 95%. Yeah. The biggest problem people have is psychology, right? I'm not a psychologist. I couldn't fix my psychology, so I fixed my approach to the market. That's the difference. You fix your approach to the market, you don't need the psychology. Yeah. That's the bit that everybody struggles with. So you just remove the bit that is broken. Anyway, go and do the position training bootcamp if you haven't done it. That will watch all of that first, because this will make no sense unless you understand how this works. Yeah, Christmas is coming up. Yeah, markets are going to go flat. Best time to spend 35 hours and 50 quid on your education. Right, I'm going to leave you there. I will be back. Hit that thumb. I haven't had John Wick out for a while, have I? I don't even know where he is. There he is. Oh my God, I've lost him. Hit the thumb, man. So yeah, I'll be back this afternoon. Back on Monday as well for YouTube. So next live stream is Monday afternoon. And we will trade NASDAQ, etc. on Monday. All right. So have a good day. Have a good weekend. If I'm not seeing you this afternoon in the member stream, I'll be back on Monday. Other than that, have a good one, and I'll see you next time.
Click, clack, charts attack, candlesticks, they spark the track. Leave move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. Westpac buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, Lee's got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads, Fibonacci maps to see. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Leads precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy legends mode. Whoa, 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 whoa. Markets run. Lead the reason markets run. Lead the reason markets run.
Digital sheen, open in range, his weapon so keen. He's the structured trader, a market machine.